All right, let's take a look at what is happening in the markets today. Now, the first thing I want to do while we are waiting for people to stream in is to actually take a look at Affirm's earnings, because we covered Affirm yesterday and they had outstanding earnings. Let me see. Let's just take a look at Affirm stock right now. So well, today we are covering Duolingo and it's down 6%. I'm not very sure why it's down 6%, but yeah. So Affirm is up 17%. I think they posted fantastic results. Let me just pull up their results yesterday. Affirm. I think I'm just going to do this while we wait for people to stream in, because like I was saying, I think like philosophically, I may not agree with buy now pay later, but you can't deny that this is a fantastic business, and they're definitely executing. So let me pull it up. Over here. All right, where is it? Alpha Wolf Impact. Okay. All right. Before we begin, I just want to quickly dive in and take a look at the firm's earnings. I just know that they had good earnings because I was reading the headlines this morning. Never got a chance to actually dive in. So let me take a look. 2025, fourth quarter. Let's take a look at the earnings supplements. So yesterday, let me see where we ended yesterday. Yesterday, when we ended, we did a firm's valuation, and I made some assumptions regarding how fast they would grow. And we actually had guidance from the company. So I just want to check that what they did against what they have posted to see how big is the beat. I mean, naturally, you would have to think that they beat their earnings. So yesterday I used 3.178 as their full year. Okay. So this is what I'm looking at. All right, so you see gross merchandise volume, okay, accelerating again. Now it's 43% growth to 10.4 billion. Active customers, 23 million. Transaction per active customer is also up to 5.8. And then revenue coming in 33% growth, $876 million, which is, I think, basically right where they guided for in the previous quarter, if I'm not mistaken. If I go back and take a look at the previous quarter's guidance, is that where? Okay, so this was actually the guidance. So they guided for okay, so revenue guidance was between 815 and $845 million, but revenue came in at $876 million, so that's a beat. Let's take a look at the revenue less transaction cost, because over here it was supposed to be 385 to 400 million, and we were saying that that was actually the most important aspect of their business. Okay, I think you can see it from here. Okay, this gives you a better view. Okay, so Affirm basically beat on their GMV, coming in at $10.4 billion, 43% growth. Revenue also a beat, 33% growth, $876 million. Revenue less transaction costs, RLTC, guidance was for around 415 million. It came in at 425 million. Let's see this as a percentage of overall GMV. Because remember, they want this to be between 3 to 4%. Okay, right now it's coming in at 1%. So they're showing that they can actually come in higher than what they have actually projected out. And I think that's good. So for those of you yesterday who were interested in, getting into a firm or already have a position in a firm, I don't think I see anything fundamentally wrong with the company. I mean, they're performing well. Today, they're up 16%, which is what I was saying yesterday. I wouldn't be surprised to actually see them get to close to 100, past the $90 to $100 today if they had a good earnings. Oh, wow. I just saw the candle. In fact, they went all the way up to $100 before coming back down. All right. So with that, let's not delay any further. Today, we really want to talk about an interesting company, a company that is down 6% from its 6% from its all-time high, 6% just today alone, and then it is actually down 40% from its all-time highs. All right, so let's begin. Today is day 9 of covering 10 companies in 10 days. And the company that we're talking about, as you can see from the screen over here, is Duolingo. So Duolingo, I think, should be an app or should be a company that is familiar to most of us. I think their company has been synonymous with language learning all over the world. And I think, over the last couple of months, I think this company has come under quite a bit of scrutiny due to the falling stock price. And I think there are also fears for this company around AI disruption. So I think it will be interesting for us to talk through the thesis for this company. And I think that the thesis of Duolingo, it's rather straightforward. And at the end of the day, it's whether you believe it or you don't. And I think that's the easiest way that I can put this. Right? Give me a second. I think this is distracting in the background. Okay, so with that said, let's get started. Now, I think when it comes to Duolingo, a lot of creators and accounts on X have come at this problem using a lot of data, using a lot of statistics, which, we like to do on this channel as well. But that is not where I would like to start my discussion around Duolingo. Because when it comes to Duolingo, I believe, especially if you listen to other channels similar to this, like Future Investing, like Tanner on Future Investing, they recently did a deep dive around Duolingo. And I think they covered a majority of, the data, the statistics that you would know to prove Duolingo company, and which is why that is not where I would like to start this discussion. So what I would like to do is to start by looking at their 10K over here. And you can see, I know it's pretty small every time I pull up the 10K. I've already tried to make it as big as I can. But you can see the first sentence that you are seeing over here is that, Duolingo's mission is to become the best, is to develop the best education in the world and make it universally available. Okay? Their mission is to develop the best education in the world and to make it universally available. And I think right now, I just want you to think about that sentence for a moment and then consider two things. I want you to ask yourself right now at this moment, what is Duolingo currently known for? And then the second question is, what is the role of a teacher? And the reason why I'm going in this direction or taking this discussion in this direction is because you have to realize that when you read their mission statement and think about what they are known for, there is a huge disconnect. You see, today, Duolingo is synonymous with, learning a new language, right? But their mission is not to make language learning accessible to all. It is to develop the best education in the world and then to make it universally available to everybody. which means that the version of Duolingo that we know and love today is nowhere near the finished article that the founder has had in mind when he first started the company. Now, secondly, why did I bring up this understanding about the role of a teacher? And I think to me, this is a crucially important aspect of understanding Duolingo's moat. You see, when I was teaching in a primary school in Singapore for about 7 years, between 2014 to 2020, thereafter, I actually ran my own, private tuition group. Now, I stopped teaching tuition because I felt like even as a private tutor, I would be more concerned about the results than the actual learning of the students. And that started to burn me out because, I knew the steps I needed to take to produce students who could ace the exam, but because they could only memorize stuff, they haven't necessarily learned the topic. And so the reason why that always ate away at me is that because when I was training to be a teacher, one of my professors in the National Institute of Education in Singapore, or NIE for short, told me that if a student cannot learn the way that you teach, then as a teacher, it is your responsibility to teach the way the student learns. And that means, I was always happy to teach the same concept in 4 different ways to 3 or 4 different groups of students. And so when I graduated, that same professor left me with this parting message. He says, remember when you go out there, when you're in school, you're teaching, things can get overwhelming, but you are not teaching English, you're not teaching math, neither are you teaching science, you're actually teaching students. And that is where I want to make the argument for Duolingo. Duolingo is an education first. It is basically a virtual educator. It is like a teacher. And that is where, people who make this AI argument have to really, that people who make the argument that AI is going to disrupt Duolingo have to understand the role that Duolingo is playing in the lives of people today. You see, Duolingo is not a platform, or at least I don't see them as a platform. Duolingo has a platform, but the moat that Duolingo has built up is that it has a pedagogy that works because it has been tested over a large number of students. They have told us before that they do plenty of A/B testing, and because of that, they can identify the learning styles of different students and deliver the concepts in a way that is easy for you to learn. Right. And so to me, I think that is the real mode of Duolingo that a lot of people miss. Because if all Duolingo is a platform that delivers information to you, that brings information to you, then yes, it can definitely be disrupted by AI. But if they prioritize education and learning, then I think AI still has a long way to go in order to make education accessible for the masses. Because in order to do that, you have to understand the human being. And, despite the multiple capabilities of AI, understanding human behavior is somewhere where I still think AI, to me, I would say, thankfully, is still lacking. So the way I approach artificial intelligence, the way I look at AI is that it is a fantastic tool for us to give us the theoretical understanding of certain subjects. But that's all it does. It gives us information. It tells us the stuff that we need to know. But to fully understand and comprehend the subject, I think it goes a level deeper where you need to take certain steps through certain processes to understand the fundamentals of the subject. And that is where developing a pedagogy that is suitable for different learning types is something that I feel like Duolingo really has the edge, and it's not something that the AI can easily replicate right now. Because you have to understand that Duolingo also has their own AI that has been trained on all these various pedagogies, on all these different learning styles from people that have used their platform over the years. They are also feeding this information into their AI as well, right? So to me, I think the AI use case is more towards the knowledge-based economy. It's more towards the technical application. But when it comes to understanding a human, understanding how different children, different students approach topics differently and understand topics differently. For example, when you talk to a student as a teacher, you have to understand whether or not they are an auditory learner, a visual learner, or a kinesthetic learner. And I struggle to understand how AI actually identify that just by you answering certain questions through LLM, right? And I think because of that, it makes me feel like this whole idea of AI disrupting Duolingo perhaps is still not as near as people say it is. And I think what the AI lacks really is understanding human interaction. So I think the reason that we are forgetting why teachers are teachers, it's not just because they are there to deliver a piece of information to students. They're actually there to provide the proper scaffolding required to present the concepts in a way that a new learner can absorb. Okay, I say it again. The teachers are not there to deliver information. They are there to provide the proper scaffolding required to present concepts in the way that a new learner can learn. By saying someone can just use AI to create the same app and teach themselves, I think that is really, straight to an extreme in terms of an example. It's like saying that someone can use AI and teach themselves to be a doctor. And I'm sure maybe for a small subset of the human population that turn out to be like Elon Musk that can teach yourself everything, they might be able to do that. But I know, at least for me, if I'm very honest with myself, that's going to be pretty damn hard for me. Right? I don't think I'm someone that can teach myself to be a doctor just by talking to an AI. Now, I could type into the AI and ask the AI, how can I carry out a coronary angioplasty? You see, that's a big word that I had to Google to even know what it means, right? I just Googled complicated heart surgery so that I can find a name to put inside here. But let's say I use the AI and ask the AI, how can I carry out a coronary angioplasty? Now, it would tell me exactly step by step what to do, and every single step that I believe the AI tells me is likely going to be correct. But it doesn't mean I have learned how to do a coronary angioplasty. Wow, it's such a mouthful over here. Because I don't even know where to begin to learn the necessary foundations in order for me to understand the steps the AI is telling me to carry out this procedure. And I do think that, I also need to mention that, the reason why Duolingo is able to be so good in their customer engagement is because they do very aggressive A/B testing. They have said it before. This is an extract from their 2023 shareholder letter. And basically, this whole idea of A/B testing is embedded into the company's culture. And they use A/B testing as a way of understanding the students, understanding learning styles, and then to be able to build systems and to build pedagogies in place in order to in order to help people with different learning styles approach the same topics. Sorry. So to me, I feel like it's fairly unlikely that the everyday user will have the knowledge to use AI to build an individualized app that Duolingo has spent the last 14 years perfecting. And then on top of having to have the expertise to use the AI to build an individualized learning app, they would then have to have a framework or an understanding of pedagogy to structure what they need to learn so that they can teach themselves the basics. And not to just only teach themselves the basics by delivering the information, but to present the information in a way that a new learner can learn. So to the people that are saying that AI can recreate Duolingo's platform, I would say that we are in 100% alignment over here. I agree that AI can definitely recreate Duolingo's platform, but the platform is not the moat. And for people that are saying that, you can use AI to teach you stuff, then if that is true, if that is in trouble, because you can just ask the AI how to build a company that is bigger than NVIDIA, that is better than NVIDIA, that can produce a chip that is better than the Blackwell. You see, the fact of the matter is that it is really not that easy. And I don't mean to say this in a way of, putting anybody down, but I think students, whether or not adult students or children, the reason why you are a student is because you don't have the necessary schema in order to understand the issues within your own learning and then use that to develop a pedagogy suitable for yourself. Right? Because if you had that schema, you wouldn't be a student in the first place. At least that is my perspective. And where Duolingo stands, it's not because their platform is differentiated, but they've managed to create a virtual teacher that can identify where you are at a certain stage of learning a certain subject, and then they're able to tweak the assignments so that it is suitable to you. But it's much less likely that an non-typical human being like you and me can identify what is wrong with our own learning and then ask the AI to create something that actually bridges the gap from what we can actually understand to what we need to understand. And so now that we have gotten that out of the way, I think thereafter, understanding Duolingo's business model is actually fairly easy. Duolingo operates on this freemium business model that you can see over here. So anybody can just go on and download the app, and they basically give free access to their language learning app to this, basically to everybody, right? So the whole idea over here is that they get this app into the hands of a broad user base, and how they generate revenue is basically through premium upgrades and other services, right? So I think I'm not too sure whether it's too small, but let me read it out for you over here. Our freemium business model, okay, that's which allows users to access our content for free and charging a subscription for additional features, right? Which is what we were saying earlier. And this is core to our success because it enables significant user scale. Now, we intentionally do not put our learning content behind a paywall. Anyone can download the Duolingo app, use it for as long as they like, complete as many of the courses as they choose, all without paying anything. Now, of course, then learners who use Duolingo for free see an ad at the end of each lesson, which is another revenue stream for them, ad revenue. And then whereas listeners who purchase one of our paid subscription enjoy the ad-free experience and then access to additional features. So they tell you that because this was in their annual letter, as of December 2024, approximately around 9% of their monthly active users were paid subscribers. And this penetration of paid subscribers has actually doubled over the last couple of years. So over here, you can see the whole idea is that let's get our app for free into the hands of as many people as possible. And as they want a deeper interaction with our app, they will be likely to pay and become paid subscribers so that they can access more features. But if you're just there to try and learn, and especially if you're very good at learning a certain topic, you can actually use the app for free. And I think they want it that way. And then it basically gives them this larger market that they can take their time to go after. And so if you were to actually break down their revenue over here, what you will notice is in this paragraph alone, they tell you two different revenue streams, which is basically subscription revenue as well as ads revenue, right? Because for people who are not paying for the subscription, they have an ad at the end of every single lesson, and that's how they generate ad revenue. So the majority of the revenue that Duolingo actually gets comes from their subscription. A smaller part of that actually comes from all these advertisements. Now, apart from this, they also do certain things. They have this Duolingo English test. I think the short form is called DET, and this is basically a certified online English proficiency exam that apparently universities accept, which I find it quite surprising, right? So this actually generates revenue for them, because I believe the fee to take one of these proficiency tests is around $59 per test. And this represents around 5 to 10% of revenue. Now, I think with the world where it is today, with all the uncertainty, with border controls being a little bit tighter, I think they have seen a little bit of a drop-off in this particular aspect. But I think other than that, the rest of their business actually is growing very, very well, especially in the most recent quarter, which we will talk about in a bit. So I think one thing that we do need to address is that, we have to understand why their stock has fallen by quite a bit, and then recently it has you can see over here it fell, had a very quick spike up, and this very quick spike up was during earnings and then came back down again. And I think that has to do with understanding the next most important aspect of Duolingo's business, which is their member growth or their subscriber growth. You see, one of the metrics that Duolingo tracks pretty closely is the number of monthly active users as well as daily active users. And I believe, like I said, these are where the majority of their revenue come from, these two groups of people, because a lot of these active users turn out eventually to become subscribers. And so in terms of their subscriber tiers, there are basically two tiers, Super Duolingo, and then a higher tier called Duolingo Max. Now, I believe the main difference between these is that Duolingo Max has more features, and then these features are being powered by their generative AI model. So essentially, over here, people they can basically choose their different subscription tiers. So there's basically three tiers, right? Duolingo Max, that gives you all the benefits, all the features. You're able to access their AI. Super Duolingo, that's normal, the old premium feature that we know. And then finally, you have the free version where people can actually use it and then just watch an ad at the end of every single lesson. Now, however, over the last couple of months, in fact, just as recently as June, we started to see declines in their user. Now, this was down to certain comments made by their CEO, and which I think he has since admitted that it was taken out of context. It was a little bit of a misstep from him. So Duolingo, I haven't mentioned it up to now, was founded by this gentleman called Louis von Hahn. He's the CEO and co-founder. He was a computer scientist, and I think if those of you who have been around long enough, you would know that he's actually the inventor of CAPTCHA. Okay, so I thought this was quite interesting. I always knew that CAPTCHA belonged to Google, but I didn't know who was the one that created it. So it's interesting to know that the founder of Duolingo was the one that actually created that. And then he didn't found Duolingo alone. He co-founded Duolingo with Severin Hacker, who is actually their CTO. He's the co-founder that helped to build the platform's pedagogy and infrastructure, and he basically led this migration into the AI-assisted content generation. And so, like I said, early on this year, the CEO, Louis von Hahn, got himself into a little bit of trouble when he sent out an email saying that Duolingo wanted to become an AI-first company. I think a lot of people took that out of context, and I think, to them it signals a shift away from Duolingo's core identity, which is basically based on human interaction. And so because of that, people actually started to boycott Duolingo, and then people started to, I think, give them very negative reviews on their TikTok and things like that. Now, however, like I said, later on, when the CEO realized this, it was clarified by the CEO, and he assured users that, he's not using AI to basically replace the workforce, and he was speaking more specifically about the individual employees within Duolingo being able to use AI in a way that helps them expand their scope so that they can deliver more value and better serve their customers. And so right now, you can actually see during the earnings call that management has told us that, when it comes to our social media campaigns and things like that, we haven't been so provocative in the things that we have put out. So perhaps we are not as rah-rah in the last couple of quarters to gain subscribers and gain more active users. And the reason for that is because right now they are in damage control mode. They seem to believe that damage control mode is over, and then going into Q3 of 2025, they can go back and resume growth. But basically in Q2 of 2025, they spend the time trying to repair some of these miscommunications and this bad sentiment towards the company. Right, so you can see over here, Duolingo CEO still battling backlash over the AI first plans. And like I said, the reason why I like him is because he was very transparent. He said the reason we came towards the lower end of our guidance, which is he's basically talking about the DAUs between 40 to 45%. They came in at 40%. He said it's because I said some stuff about AI and I didn't give enough context. So he took ownership of what he had said. We got, particularly in our social media, some backlash. So we wanted to make the sentiment positive. We stopped posting AG posts on our social media, and we have started to post things that we thought would get our sentiment more positive. So you can see over the last couple of quarters or last couple of months, they were in damage control mode. And then basically thereafter, going into Q3 of 2025, that is when they will really start to ramp up growth again, try and use social media as a form of marketing to their users. So I think when people look at this, there's still comments about AI, right? And then because of that, people boycott the platform, daily active users are coming down. People say because of that, Duolingo is a dying company. Now, I'm not too sure if you realize the earlier argument about AI taking over Duolingo cannot be true if the people that are using Duolingo are boycotting Duolingo because they feel like AI is taking over. You see, I don't hold any stake in this company, and I'm trying to be as objective as I can. So if you think I am wrong in any way from this argument, please let me know down below in the comments, or please let me know right now in the chat. But you see, people from the start have been saying that the bear case for Duolingo is that AI would disrupt their platform. Someone else is going to come along, use AI, create another platform, and then people will use that platform instead, like Apple or Google. Just install the language learning device on that phone, and then people will just use that new language learning device and they will not use Duolingo, right? But what you just saw is people boycotting Duolingo because they felt that Duolingo was leaning too much into AI, and they actually feel like they like this human element of Duolingo's business. And so to me, these two things cannot be true at the same time. If the consumer doesn't want Duolingo to lose that human element, if the consumer doesn't want Duolingo to become an AI, so-called AI first business in the way that AI takes over the job of a human when it comes to teaching, then there is no way, even if the AI can create a similar platform, that people will migrate over to that new platform, whatever it is, because it is going to be an AI generated platform, whereas Duolingo will be positioned as the platform that basically focus on human interaction, focus on human behaviors, but then empowered by AI. And so I think if you are worried about AI taking over Duolingo, then you need to give me an explanation of why people are boycotting Duolingo is a bad thing. Right? Because you're just saying if you're saying that AI can take over them, then people shouldn't be boycotting Duolingo when they are pivoting more into AI, or when they are perceived to be pivoting more into AI. But the very fact that people are boycotting Duolingo because they're perceived to be pivoting more into AI tells me that perhaps it is unlikely that another AI platform is just going to take over what Duolingo does, because people appreciate the human element and the human interactions and the acknowledgement of human behaviors within Duolingo's business. Like I said, even after all this clarification over here, you can see that Duolingo stock price still continued to fall. That was because of a variety of different reasons, and the first one, being ChatGPT 5, right? During OpenAI's demo, I didn't watch the demo, but I've been told and I read that apparently they created a language learning app. Again, back to the argument: if people just wanted to learn the language, then yeah, that's fine. But people boycott Duolingo because they felt it was being too AI driven. And if that is the case, it is very unlikely that AI is going to create something that people that are on Duolingo now are going to like. And then after that, you have this other headline that says that Duolingo facing an existential crisis as Google Translate rolls out features to tutor users and handle live translation as a bonus. Okay, same thing, same argument. If all people want is simple translation, I mean, like when I was traveling in last, use Google Translate. I didn't use Duolingo because I had no interest in learning German. I just wanted to know how to order my lamb chops in German. That's all. And my bratwurst. But because of that, I took out Google Translate, snapped the picture, and let Google Translate do the job. I didn't use Duolingo. But Duolingo is not for translation. Duolingo is for people who want to learn the language. And then there is Meta. Meta, basically the same thing. They basically offer translation, dubbing into a particular language. So he Mark Zuckerberg basically showed this video where the lady, I believe, was speaking in Spanish and then later translated it to English. And the AI actually adjusts your mouth movements so that you don't have the weird kind of visuals when the person's mouth is actually speaking in Spanish, but you're hearing an English voice. However, like that, this is a translation and not learning language, and it's not education, right? So it doesn't really eat into Duolingo's moat. And so, the founders of this company is also actively taking steps to protect the business. I thought for a while that either Meta or Google may want to buy out Duolingo. What do you think? Do you see such a thing can happen? I think if it's going to happen, it's going to happen under this current administration, because they are more favorable to M&As. However, the only thing is that I think it fits in with Google, right? Because I think Gemini recently released this thing where they had this like Gemini classroom. If you guys follow Chris Patel, Amit's friend, I think he was posting about this on X. That's why I saw it. Google Classrooms, where Gemini became like a teacher. And I think it integrates well with Duolingo. Now, the only problem is that Google is already facing a lawsuit and potentially, having to break away one of the components of their business. And I'm not too sure whether they'll be allowed to acquire a company the size of Duolingo. and with the moat that Duolingo has as well. I think it will be a good acquisition. Whether or not it's happening, I think it's fairly unlikely. Yeah. And I don't see the founders as wanting to sell. They don't come across as people who wants to sell. And so if you think about it, what the founders are doing is to actually make their product a lot more sticky. In the past, apparently, they have this system. I've personally never used Duolingo before. I believe my dad has used it to learn Russian. I believe he was using it to learn Russian. But yeah, I personally never used it before. But I know in the past, they used to have this system where you have hearts. Then every time you get an answer wrong, you lose a heart and things like that. So right now, they have changed that mechanic. Now they use energy, and so you start with 25 units of energy, and then you spend 1 unit every time you do an exercise. And then when you get 5 in a row correct, you actually replenish a certain energy. So it basically rewards you without punish. So in the past, it was more of a punishment system. Now it's more of a reward system. And so the reason for them doing this is that because to them, this actually increases engagement. And if you remember, I was saying earlier on, Duolingo actually relies on the freemium model where people actually download the app for free, use the app for as long as they can. And then, it's like Candy Crush, right? You play for free, and then after that, you reach that stage, and you just want to cross that stage. In the end, you spend $1. And then the dollar becomes $2, and $2 becomes 3, 4, 5. And the next thing you know, you're spending $20 buying gems so that you can play the next stage of Candy Crush. And I think Duolingo, similarly, they have that kind of effect on people, and then eventually people just end up subscribing. And so they also confirmed with us in their most recent earnings call that what they're seeing over here is that increases in revenue, bookings, and increases in daily active users, because it increases the overall median time being spent on the app. And they're happy with this because this gives them a larger pool of people that they're able to cross-sell into their paid subscriptions. And so apart from this, they're also rolling out areas like chess, math, and music. And these are things that are basically in line with their overall vision and mission to basically make education universally accessible to everyone. And so you can see they're not just a learning platform for language, right? They are an educational platform. The platform itself is not the moat. It is the pedagogy that goes behind and underpins the whole thing. And they are using AI as well to support all of these developments. So I don't think they're going to be as easily disrupted as people make it out to be. It's not so easy to say that, you know what, I'm just going to take AI, ask AI to write a code and code me my own platform, because the people that are on Duolingo's platform have already shown by the very fact that they boycotted the platform due to the AI comment, tells me that people today still want that human interaction. They still want that human connection when they're learning a new subject, because they believe a human is basically the best person to understand you, not some sort of AI model. Right? And so when a human is able to understand you, they're able to develop lessons that cater to your specific needs. That is what makes Duolingo's platform sticky. So AI can create a new platform, but AI, until the point where AI, in a sense, you would want to say, I'm a little bit hesitant to say this, until AI kind of becomes sentient, which is quite scary because, then Terminator is going to happen again. But if and when AI does have some sort of capabilities to, comprehend human interactions, human emotions, human characteristics to a good degree, and then at that point, perhaps you can make the argument that Duolingo's moat is under threat. But right now, where AI is disrupting is knowledge-based work, is in all the technical work, and I think that is actually a very different market from what Duolingo's moat is, and that's why I don't think there is a big danger of them being disrupted right now. Okay, and finally, I think this is the second last thing I want to bring across. So, like I said, the founders, they're not just sitting around doing nothing. They are actually taking steps to basically protect the company. And I like when businesses don't just focus on growing revenues, but they actually focus on being defensive as well, protecting their profits. And so they have been testing the possibility of sending people to a web purchase flow. Now, they did point out when they do lose some bookings, because when you send people to an external website to do the purchase, there's definitely more friction compared to doing it through Apple's platform. However, this actually significantly increases their profit because they don't have to pay that 30% to Apple, right? That toll gate fee. So I thought that was quite interesting that they are not just thinking about how to keep users on their platform so that they can grow the market that they can advertise to, but at the same time, they're also thinking of how to increase their profitability. So you can see over here, and these are things that I'm really looking for when I'm investing into a company, because I want to know that the management is not just the kind of management that is focused only on growth and then profitability is going to be an afterthought. I would like to see, especially companies that are a little bit older, that management starts to balance both revenue growth as well as profitability. And that is exactly what we are seeing in Duolingo. So right now, I just want to take a look at the quarter's earnings before we go into the valuation and putting Duolingo through our framework. Now, in the second quarter of 2025, they reported daily active users of 47.7 million. This represented a 40% year-over-year growth, as well as monthly active users of 128 million. This is 24% year-over-year growth. Now, both of these numbers saw a slight dip from Q1, partially down to the comments made by the CEO, but also partially because I believe they had a very good ads campaign in Q1 of 2025. Now, paid subscribers increased to 10.9 million, 37% year over year, and paid subscriber penetration. So you can see this basically represents the percentage of monthly active users that eventually are converted into paid subscribers, and they actually track this number. So later on in the valuation, what you're going to be able to see is that this number has actually increased quite significantly over the last couple of years. In fact, it has nearly doubled in the last, I would say, 4 years or so. And so revenue this year came in at this quarter came in at $252 million. This represents a 41% year-over-year growth. So you can imagine, even with lower daily active users, they are managing to grow revenues over 40%, which means that once sentiment around the company recovers, which management has already told us that it seems to have recovered, then I believe that they can actually grow faster than this going towards the end of 2025. Total bookings also grew 41%, 268 million. Net income, 84% year-over-year growth. I mean, this is nothing too surprising because it's still a very small number, $44.8 million, and adjusted EBITDA of 78.7 million, which represents a 31% margin. Now, this is important because later on, when we do our valuation, we need to assume a certain adjusted EBITDA multiple. We know that right now they're doing around 31%. That means, it's possible that they level close to the mid 30% range when they are fully scaled out. Now, up to this point, is there any questions on Duolingo before I carry on any further? If not, I just got this notification. Basically, what I did, seeing the markets were falling slightly today, I actually closed out one of my Lululemon put so that it frees up a little bit of collateral for me to go and buy HIMS. So I bought another 200 shares of HIMS that just got executed when we were going through Duolingo's business. So that means I once again have 1,500 shares with an average price of around 43, 44 bucks. And then another 10 cash secured puts, which is another 1,000 shares at $45, but those expire 19th of September. So we'll wait. I think what's likely is that, I think we'll see a little bit of a weaker price action, which means I'll end up having around 2,500 Duolingo shares. On paper, the average will be around $43, $44. Once you include all the premiums I've received, it's probably going to be around $38, $39 of an adjusted cost basis. So that is fine. I think this last 2 weeks I've been covering companies that are not my usual companies. So there are a couple of things that I really want to talk about SoFi and Grab and HIMS, which I think I will end up having to cover next week. And then I will talk you through my position during that time. But if there's no questions, I want to dive into the valuation and then subsequently the framework. Okay, let me make myself small. I don't know whether this is actually easier to see or is this. Do I have a position in Duolingo? No, unfortunately not. It's always one of those that has been in my watch list, but it has perpetually been in my watch list. So, for example, right now it's in my watch list. Why haven't I pulled the trigger? Because of the thesis that has been building up around Ethereum. And so a lot of my cash has been going towards buying ETH by itself, as well as collateralized as cash account puts on BMNR. And recently, I would say that Duolingo has fallen quite a bit from the high, definitely. But because I personally don't use the app itself, it's a little bit hard for me to say how good or bad it is. I've seen people use it, and which is why recently, actually, yeah, I'll be very honest, I'm a little bit more. Even if I buy Duolingo, right, it's not going to be a long-term thing for me. Yeah, it's not going to be a long-term company for me. It's going to be a swing trade position. Back to the highs again, and yeah, it's going to be a smaller part of the portfolio. But right now, in terms of swing trades, I have two that are in play. One of them is UNH, and the other being Lululemon. Like, honestly, today I just went to a Lululemon store, and I can understand why people. I haven't been a big Lululemon fan, but let's put it this way. Today, when I went there, the way they serve you, it's like the whole store suddenly knows my name. I just tell one person my name, and the whole store knows my name, and everybody addresses me. Hey, Elijah, your room is ready. Hey, Elijah, let me go get this shirt for you. I just told one person my name, and everybody knows that. And it's these are the small intangible things about certain companies that I think you don't really get to see unless you use the product. And I was so impressed because when I go there, I also realized, and I've also just been so actually this is something that was pointed out to me recently as well, that Lululemon apparently has global fit as well as Asian fit, because they're starting to expand more into the Asian markets, because that's where they see the next leg of growth. And I do think that the Asian market is potentially a big market for them, because I think people here, despite the slowdown in the US markets, I don't think people are slowing down here. Today it was crowded when I was there, and it was like a midday on Friday. So people should be working, but the place was crowded. Not only was the place crowded, I told one sales lady my name, and everybody knew my name after that. Everybody was like, oh, Elijah, your shirt is ready. Elijah, your room is ready. Do you want to try this? Elijah, okay, sure, Elijah, I'm going to get this for you. Yeah. So because of that, my two swing positions right now are UNH and Lululemon. That's the long way of explaining it. Duolingo has always been something I like. I understand the business model. Never ever have enough cash to want to allocate into that. Yeah, but excited to talk about SoFi and HIMS. There's so many things. I think SoFi being included into some of the bigger indexes, that's interesting. And then basically, I want to redo my HIMS valuation again, and perhaps I might do it through a live stream rather than a curated video, so that anybody can ask me questions as I'm doing the valuations. See how that goes. All right, so let's get into the valuation. Let me see. I'm not sure if this is big enough, but what you're seeing over here, the first line that we are tracking is actually the paid subscribers as well as new subscribers. I believe this number is wrong because we were, let's go here. All right. So you can see the paid subscribers as a percentage of the monthly active users in the last 3 years, just 3 years, it's grown from 5.9% to 8.5%, close to 9% in the most recent quarter. Monthly active users is still growing pretty healthily. Now, you can see over here in terms of the growth rates between Q1 and Q2, there's definitely a decrease. Like I said, this was due to a very strong marketing campaign in Q1. And at the same time, not only was a strong marketing campaign, the CEO's statements around AI also, led to a boycott of the business. But again, people see this as a bad thing. But I think this tells you what the consumer on Duolingo wants, which then goes against the thesis of AI is going to disrupt Duolingo, because if the consumer doesn't want AI to disrupt Duolingo, AI will not disrupt Duolingo. right? Revenue per customer has been fairly steady over the last couple of quarters, around $22. So what you're seeing in this graph over here, I think both graphs, if I'm not mistaken, I'm showing you the number of monthly active users that has been growing, and you can see this is the first time there's a slight decline in monthly active users on the quarter-over-quarter basis. Okay, first time in history there's a quarter-over-quarter decline in monthly active users, and but I think what is important over here is that the penetration of the monthly active users has been increasing. This penetration refers to the number of MAUs that have been converted to paid subscribers. So these are the metrics that are important to the business. And if you are interested in Duolingo, this is basically something that you need to track. Let me check the date, the 29th of August. Okay. So with that, let's take a look at the quarterly numbers over here. Revenue still growing at 41% despite lowering numbers on the member fronts. And I think that is actually a pretty good thing, which means that I will expect this to grow even faster in Q3 2025. Similar for gross profit and net income, right? Net income margins right now around 17.8%. I believe they can continue to actually bring this up past 20%. Now, gross profit has been very strong, consistently in the above 70% range. So I think that's good to see. And then over here, the cash flow from operations, I think what we have, fairly straightforward, around $90 million in cash flow from operations, and then they use their capex tend to be very little as a percentage of overall revenue, which leads to a free high cash flow. So if you take a look over here, first graph, revenue growth, you can see fantastic, just up and to the right, right? Kind of, I wouldn't even say it's slowed down a little bit. It's just moderated into the 40% range, which isn't really a moderation. And then after that, yeah, despite the weakness in terms of the average users, you can see in terms of monetization, no such problems over here. Gross profit, it looks like a sharp drop, but this basically just dropped from 73 to 71. So it's within a 2% range. It's just that because it's a small range, that's why this movement seems like it's so big, right? But it's basically between 73, 71% if you look at the numbers over here. So this is, to me, no big deal. Gross profit margins and gross profit has been growing, so I'm not too concerned over there. Net income in 2023, they turned profitable, and since then they have consistently stayed profitable with increasing profitability. And then finally, their free cash. This is like to see free cash flow up and to the right. Nothing much to say over here. Free cash flow margins are also up and to the right. Right, currently right now, they are around 30% free cash flow margin. So it's actually pretty healthy. Right, this is actually pretty healthy. All right. With that, I want to take it into the valuation over here. Let me see. Okay, Duolingo's WACC is actually 10%, not 9%. So let's change this to 10. Okay. Basically, if you want to do it the academic way, you can actually go and calculate the WACC. I've mentioned this a couple of times, but in case some of you are new, if you want to do it the academic way, I have it at the back. But you can just use any discount rate that you feel like it's a suitable return for you. The higher you use, the more conservative it is. That's all. Now, the 2025 number, I'm going to use, I'm going to use 36% because that is basically what they actually guided for in their Q2 earnings. They expect Q for the entire year to come in over $1 billion in terms of revenue, which represents around 36% year-over-year growth, and I think that's fairly strong. Cash flow from operations, currently it is at around 38% margin. I'm expecting that to maintain for this year and then increase to around 40%. And basically, I'm assuming no other increases to the end of the decade. CapEx spend as a percentage of revenue, been less than 2%. I'm just assuming 2% all the way through to the end of the decade. And with that, cash over here, you can see basically they have $976 million in cash and $120 million in short-term investments. They do not have any debt at all. So I believe so. Let me just double confirm. So if you take a look, Duolingo, if you're looking at their balance sheet, cash, yep, $976 million, and then short-term investments over here, $121 million. So you add these two together, you get over $1 billion in cash and equivalents. And then you can see in terms of liabilities, yeah. Yeah, no debt over here. So that's fine. So because of that, I think we are good. If we go back to this page, what you're seeing over here, I think is a share price of around $519.38. Now, EBITDA margins, I'm using 35 because right now they are currently doing around 31, 32%. So by the end of the decade, I'm expecting this to increase only by 3%. So 35%. EV to EBITDA multiple. Oh, I should have shown you this before I left Fiscal AI. Okay, how did I come to this 20% number? The assumption is that by the end of the decade, they are still growing. That is my assumption. Right. Otherwise, I would have to lower this number down to even slower, below 20%. And I think for those people who think that AI is going to disrupt this business, then perhaps you can lower the valuation and later I will lower it to show you. But for now, let me just bring you back to fiscal.ai. Let's compare the ratios of this company with the industry. I know the companies that I'm using or that I have used are not in the same industry, but to me, these are SaaS businesses as well. And then you can see for Duolingo and Shopify, both of them, EV to EBITDA, 100 plus range because they are both still growing and they're both fairly small relative to the bigger companies like CRM and Google. So if I use CRM and Google, I would say that they are mature, more slow growing companies. I mean, Google is, both of them are growing in the what? I don't know what Salesforce growing at. Salesforce revenue growth. Well, Salesforce is growing revenues at 9%. Okay. Is this wrong? Am I mistaken? Salesforce growing revenue at 9%. Okay. That's surprising. Even if that's the case, these two companies trading at 7 and 20 times. Google and CRM now. I think it stands to reason that Duolingo and Shopify will not reach the scale of CRM and Google by. Okay, I can't say they will not reach the scale of CRM. They will not reach Google's level by 2030. So because of that, I think 20 times EV to EBITDA should be fairly conservative for them. That is the way I think about it. Like I said, if you disagree, anytime you can always use a different multiple that will definitely change your own valuation, but at least that's how I think about it for now. And so with that, you get a share price of $670. Like I said, if you want to be really conservative, you can give 17 times, which is Google's EV to EBITDA, much lower. Even then, price target with a 10% margin of 50 is 491, which represents a 63% upside from here. So is this investable today? Yes, definitely. Like I said, my threshold for something that I feel is investable, I want to have at least 50% upside in the next year or so. That's what I generally aim for. Like I said, because of this 63% number, there tends to be other better opportunities like HIMS. I mean, this year up 110%. Yeah, SoFi this year also. I can't remember what SoFi's year to date. So I tend to look for things on at least on a 1 year basis. SoFi up 79% on a year to date basis, right? So to me, that is why Duolingo always just missed the cut. They're either not within this long-term, broader macro thesis that I have, or yeah, in terms of their returns, even right now, it seems a little bit. 63%. It's not bad returns by any stretch of the imagination. But if I have HIMS and if I have SoFi, then Duolingo doesn't really fall in the list. And to me, I like Oscar, and UNH because I feel like there's a broader play for healthcare over the next couple of years. So because of that, that's why Duolingo isn't in the portfolio, not because it is a bad company by any stretch of the imagination. Now, for those people who think that AI will slow down this company, let's just assume 25, 25, 20, 20, 20, 15. Even then, you get a 33% upside from here. Let's go this 35, 35, 35, 35, 35. Okay. If the growth slows and margin compresses, then that's, even then it's a 22% upside from here. Okay. It's still a 22% upside from here if you assume growth slows, margin compresses. Right? Yeah. To me, this shows that this is undervalued. It's just that the companies that I'm holding, I have a lot more conviction in. That is all. And we can't get all the winners ultimately. So I have already placed my eggs into my baskets: Grab, UNH, Oscar, Hims, and SoFi. So I think I'm happy with that. And a little bit into Lululemon. So yeah, fantastic company. Not looking to add, not because I'm bearish, but just because I feel like, there are better opportunities for my risk tolerance out there. Yeah, even if this is 20 and then this goes back to 38, it doesn't need to be immediately 40. Even then, 45% upside, not too bad. It really depends. Like I said, this part of the DCF really depends on your assumption. People think as if DCF are like some magic calculation that will tell you whether or not the stock is a buy. At the end of the day, if you're honest with yourself, whatever number that you put in here is really up to your own biasness. So, it's only as accurate as you are honest with yourself. And to me, I don't think it is that accurate because I really don't know what's going to happen in 2030. I can assume, but I am in no way thinking I know for sure what is going to happen in 2030, right? Let alone in 2027 and 2028. So this is really just a best guess, and it's good to understand what the market is pricing in, and then you can see whether or not that is something you agree with. Okay, with that, let's take Duolingo through our framework. Where is my framework? Oh, it's not open. Okay, let's take a look. Have PayPal, Nike, C Limited, Affirm is here. Okay, I've copied it. So my compounders. All right. I've already copied my Affirm. So we can just dive into Duolingo today. Let me save my valuation process. So right now, let's remind us, Duolingo is not a platform business. It is an education business. Their moat is not the platform. It is the fact that they have humans on the back end using AI to develop pedagogy that can suit various types of listeners, the various types of learners, in order to deliver them information in a way that they can understand and not just giving them the information wholesale. And the very fact that people have boycotted their platform because they were perceived as leaning too much into AI, where the consumer fear they will lose the human touch, the human interaction of the business, that they boycott the platform. This shows me that it is highly unlikely that AI is going to disrupt their platform anytime soon. Now, if AI can one day accurately, what's the word I'm looking for? Can accurately understand human emotion, can accurately perceive human emotion, then that's when I think Duolingo might be in trouble. But until we see AI at that level, I don't think that there's anything to be worried about. And you also have to realize that at the same time, it's not as if Duolingo is a company that is not making use of AI. Like I said, how do you think they're training all of their models? How do you think they're coming up with all these different pedagogies? AI that they're using is fed with the data that they have learned through human interactions and then being worked off this data to develop the frameworks for learners to learn. So with that, let's dive in. Total addressable market. Like I said, this is not a platform market. This is not a software market. This is an education market. TAM is definitely greater than 10 times of its revenue. CAGR of the TAM, I mean, is there a TAM for, how do you calculate a TAM for education? Okay, wow. The global education technology is expected to grow 13.3% from 2025 to 2030. That's by Grandview Research. Okay. Wow, okay, I didn't even know that. All right, so this means, oh, what's up with my did my Excel just died on me? No. Give me a second. I can't click on anything. Okay, got it. It's simple to explain. Yes, they make money mostly through subscriptions, and then the free users basically, use their platform for free, watch an ad at the end, and then they make ads revenue, and that's the bulk of their revenue, right? Switching costs. Is there switching costs? There's honestly no switching costs apart from your subscription, which you can just cancel if there's a better platform. There's no switching costs. Network effects, like I said, I think to me, the network effects is in having more people on their platform where they can understand the larger variety of learners and then to tweak their lessons in a way that will help a similar profile of learners that eventually use their platform in future. Low cost advantage, no low cost advantage. Economies, yes, definitely. Regulatory framework, I would say no. I don't think there's any regulatory framework or hurdles over here. They just need to be on the App Store and then they can be downloaded. Intangible assets. Now, strengthening and clear mode, definitely. I'm a little bit tempted to say fully built out because Duolingo has become a verb in certain aspects, but they're still so small. So I'll give them strengthening and clear. Of course, I think there's still space to improve. I think one of the things that I was thinking about when I'm looking at my framework is that it's not clear enough what I think I need to have a little bit clearer distinction of when I'm looking at compounders and when I'm looking at companies that can potentially grow multi-baggers from here. So I need to tweak this a little bit, and I'll show you the finalized framework next week. And then what we're going to do is to run through these 10 companies, just run through not the whole thesis again to see where they all land. And then if everything fits, then we will basically be taking this framework, and then eventually in future, whenever we assess any new companies, we'll run them through the framework and create our own list and our own tier list and things like that. Okay, revenue growth faster than TAM, definitely. Hyper growth, definitely. Multiple scalable revenue streams. One dominant revenue stream, right? The optionality over here is in going into different verticals. They can go into math, they can go into chess, but it's all still subscription revenue stream. So it's not as if, I don't know how you want to score this. Because the way that I was thinking about revenue streams is like HIMSS. When HIMSS goes into a new healthcare vertical, they are making new revenue that they otherwise wouldn't have had. But when Duolingo opens up chess, people who are already subscribed on Duolingo because of Spanish, because of German, because of learning English, they will get access to the chess lessons without having to pay extra. So for me, I would still say it's one dominant revenue stream with one or two smaller bets. Because once you are a subscriber, you benefit from whatever thing they release. There's no incremental revenue. Of course, they can increase the price of a subscription. But apart from that, it is still that one dominant revenue stream. They increase the price of the subscription, you pay it, but at the end of the day, when they add new things, you still pay the same price. If they do change price as they add new things, please let me know. But I'm not too sure how often they actually increase their price. No customer accounts for more than 10 to 15% of revenue. That's true. Gross margin is high. Strong cost control, definitely. They got no debt. I think they should get full marks for the debt over here. Goodwill less than 30%. Positive free cash flow. Oh, they should get quite a good score because they are positive and growing free cash flow. And I think this particular framework really rewards companies that have good free cash flows. Visionary, founder-led. I don't think they are buying back shares. Are they? But they are quite disciplined in terms of oh. Okay, they have no large-scale buyback program mentioned. They occasionally buy back shares here and there. I'm not going to give them any points for that. 0.5. Using that, low to no risk. Exit unprofitable segments. Again, low to no risk. Diversifying suppliers and customers. I think they're actively working towards, as in they're building in more and more different verticals other than just language, right? So when people finish language, they can do math, they can do music, they can do chess. Working towards, they haven't built out those other verticals yet. Simplify operations. I think they are adjusting their platform, seeing how to incorporate AI into the platform. The things like the change from the hearts to energy and things like that. It is about simplifying operations as well as increasing retention. So I think I would count that working towards that, improving liquidity, nothing to improve, no unnecessary M&A. Core business suffers in downturns. I think they can survive downturns. Do they gain market share in a downturn? I'm not very sure. Now, the pandemic, they got a boom because people were stuck at home with nothing to do. Duolingo became popular. But in a recession, will learning Spanish or German or Russian be near the top of your priority list? I highly doubt so. And I think we would need to see. We would need to see how it plays out if we do enter a recession. Right? 5 to 10 years, survive one bad market cycle. So with that, oh, sorry, I forgot to change this to Duolingo. 27.5, very close to a high quality company, just 0.5 off. And I think really that's where it stands. And I guess that's also why, this is exactly, I didn't plan this, but this is really exactly what I think of it. It is a very close to a high quality company, but not really there yet. There are certain things that are missing. And because of that, which is I've never ever put the trigger on this company, despite it always being near the top of my watch list. But for those of you who are in this business, especially at this price point, I think when it was in the $400 range, I was a lot more hesitant because I do feel like it is fairly richly priced. I saw certain comments. I am by no means very good at technical analysis. I know the basics. That's about it. So I've seen people say that, that this right now can potentially drop to the 0.618 Fibonacci retracement. And if so, I believe the price is in the middle $200 range. And I think buying at the middle $200 range would give you a lot more margin of safety. Yeah. And when you're buying at that range, you don't have to be worried about, you don't actually have to worry about AI disruption and things like that. They've already shown that they can survive all of these things. And I feel like that's perhaps, the multiple would start to make sense. Yeah. Okay. And so with that, if there's nothing else, Kim's is 42.98. I just bought it at 43.10. I guess, the market is just, taking a breather today. And I think, it is the last day of August, the last trading day of August. Everyone is trying to prepare for a weaker September. So I guess it shouldn't surprise us that markets are selling off tonight. And I think Monday market isn't open, if I'm not mistaken. So Tuesday will be the first trading day of September. So let's just take a look at some market movements before we call it a night. Is there any questions? Otherwise, let's take a look at the market movements. Okay, Affirm, previously they were up 16, now just up 12%, just, but it's still, yeah, it's still a fairly decent move. yesterday I just said I wouldn't be surprised if this gets to $90, $100, and literally this hit the $100 and it came back down. I mean, Duolingo down 7%. Again, like what I was saying, right? I believe the person that I can't remember, I should have saved it. Someone drew some line here and says that this is the 0.618 Fibonacci retracement. I haven't done any Fibonacci retracement over here. But the whole thesis, if you're looking for a technical explanation, is that there's a depth cross over here, 50 MA, cross the 200-day moving average, and then you should be looking for a downward somewhere to the 260s or 240s, I can't remember. That is the thesis. So if for people who are interested, like I said, comfortable place to dollar cost average all the way down. Yeah, but for me, I don't own it. I think the moat is not as easily surpassed as what people think. That's for sure. But I don't own it personally. Alibaba, fantastic earnings. I have it in my other portfolio. Let me see if I can show it to you. Oh yeah, I do have the other portfolio. Give me a minute. So for those of you who might not know, I actually have two portfolios. So this is the one where I usually run the wheel strategy. This other portfolio, I just buy and hold stuff. I tend not to touch it. It's a little bit more long term. Let's see whether I can show. Yeah, so the first one was on Weibo. This is on Momo. It's a much smaller portfolio. Yeah, this is where I have my last 100 Palantir shares. You can see my diluted cost basis is negative 200 because I've realized so much profit from here, moved it into other companies. Alibaba should be doing well. I mean, this I bought the 9988, which is the shares on the Hong Kong exchange because I'm able to. And I'm expecting that, you know, when market opens on Monday, they should see a pop as well, similar to the US markets. Only position that is down in this portfolio is actually end phase. Average cost basis 54. I think once you net off the premiums, I think it's somewhere closer to $49 or $51, something like that. AMD got in at an average price of 114. Actually, my average price was even lower, but I ended up buying AMD in the 150s. So that's why I pulled it up. Google, finally, I diluted cost, 151. Today we are, you know, doing well, up 40%. So you can see this portfolio is more of a buy and hold. I don't really run much option strategies here. I just buy and hold stuff in this portfolio. The only thing I have is United Health covered call on this. I have 100 shares of United Health at $275. And then I sold a covered call expiring 19th of September. Everything that I have expires 19th of September because I'll be overseas by then. I received $385. Right now it's worth 58 cents, right? So, I mean, yeah, I don't think, personally, I don't think there's a need for me to close this anytime soon. I don't think you'll get to 350 by 19th of September, considering that September is a weaker month. LFMD, I'm going to be doing it on Monday. I don't think I can stream on Tuesday. Yeah, I mean, after doing 10 days in a row, I need to take some time to look back at the streams, see how to improve things. I will take maybe 2 or 3 days to actually adjust some stuff on the end, like adjusting some of the spreadsheets that I've been using, adjusting some of the overlays that I've been using for the stream and things like that. And then we should be back on Thursday next week. I'll be covering SoFi and HIMS on Thursday. Yeah. And then on... So Thursday night, my time is actually Thursday morning, your time, I believe. That's when I'll be on covering SoFi and HIMS. And then on Thursday night, US time, which is Friday morning, my time, I should be on doing a live stream on Grab. I think. Yeah. I might have to go into Malaysia for a bit, not very sure. But if I'm not, I will do a live stream on Grab. Otherwise, it will have to be on, you know, Friday night, your time, which is Saturday morning, my time. And then that's when I'll be talking about Grab earnings, as well as giving a look into the app and how we actually use it in Singapore. And then you can actually have an idea of whether or not it's worth investing in. Yeah. So that'll be a plan. I'll be spending the next after LFMD on Monday. I'll be spending the next couple of days cleaning up certain things. I've been looking back at the last 10-day streams, cleaning up certain things, making it a little bit more tight in terms of the presentation and things like that. And I hope to be back on Thursday. I will be on talking SoFi, talking hymns. I'll be on with the new framework, and I will be on with a new streaming schedule that I hope to be able to stick to regularly, so that it's easier for you guys to know when I'm on. Yeah. Yep. So with that said, I think we will bring this stream to the end. It's already been around an hour and a half. Thank you everybody for coming. I appreciate it, and I will see you tomorrow. Well, not tomorrow, on Monday. Have a great weekend.